Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, let's get talking about one particular hospital company. Rainbow Children's Medicare reported what was a subdued set of Q2 numbers. Occupancy slipped sequentially, while the margins, however, sustained above 30%. The management has reiterated mid to high teens revenue growth guidance. To discuss this and more, we have Ramesh Kancharla, who's the chairman and the MD of the company, joining in. Mr. Kancharla, thank you very much, or rather Dr. Kancharla, thank you very much for joining in and speaking with us. If you could just, give us a sense in terms of the guidance from the previous quarter, or rather the trends from the previous quarter, where you had the occupancy dip, but you had your average revenue per occupied bed increase. Is that because there are lesser volume of lower ticket surgeries and occupancies taking place, and the case mix is possibly a little more superior? That's what sort of panned out this quarter as well?
Yeah, that's exactly happens. When we have a seasonal business, usually seasonal business has a low ticket and also high volumes, which is why when you see the current quarter results, the volumes have come down, the occupancies have come down, and also the kind of a revenue has come down. But overall, your EBITDA is stayed fine, and also the RPOPs are pretty healthy because of the superior case mix.
So just give us a sense in terms of what we can expect when it comes to occupancies, as well as the average revenue per occupied growth. Per bed, do you expect this kind of metric to increase quarter by quarter?
I think they should increase rather than RPOP, revenue per occupied bed, is always a little bit of difficult for our children's hospital. We look at both RPOP as well as kind of ARPP. So ARPP is probably a better metrics for children's hospital. Therefore, when you have a kind of a high quality business and a low ALOS, your RPOPs will obviously go up significantly. When you have a lot of seasonal business, so your RPOPs will get moderated, and then your revenues will kick in better, and that translates to kind of a better EBITDA as well. So the percentages may remain the same, but your overall throughput will be better because you are already the Rainbow is a very fixed model kind of things. Beyond a critical point, anything which is beyond 55% of occupancy, our EBITDA conversion is very significant.
Sure. Also, just in terms of overall, if I'm looking at newer operations, especially in the Northeast, how is that done for the company, and where do we see that headed here on in the second half of the year?
Yeah, it's a high quality business. What they have is they have a high obstetrics, and they have a IVF, and also the gynecology. They have a decent pediatrics. What we plan to do is we plan to add pediatric specialties and drive the intensive care services more aggressively. We already started doing transport services and those things, adding specialties. So make it a proper hub for based in the Gauti for the Northeast. We see a great opportunity in that territory because there's no other children's hospital delivering the high quality and also specialty care. So with a strong base of obstetrics and pediatrics, if we can build the specialties and more intensive care services, this would pan out to be a very good business for Rainbow.
Right. Dr. Kancharla, let's cut down to the brass tacks. Over the next 6 quarters, 1.5 years, how do you expect your revenue to grow in terms of average revenue per occupied bed, in terms of the bed addition that you have, and in terms of increased occupancy? You've told us that after 50%, all of that starts to flow down to your margins as well. So when occupancy increases, the number of beds increase, and at the same time, RPOBs, if you could give us a sense on where that goes, we'll obviously be able to derive better what the EBITDA of the company looks like as well. So over the next 3 to 6 quarters, if you could give us a sense of a trend that we should track.
Yeah. Okay. So in the 3 to 6 quarters, if you go back and see that in the last the 2 years, we have almost about 760 beds. So addition of this 40+% of the beds to the existing beds to us, the next 6 quarters, I think what we have, we do not have a many hospitals to come in. The 2 more hospitals are going to come in, and Bangalore is about going to commence in about next couple of months' time. Post that, we do not have a really serious any operations going to come on. It's going to be an operational excellence, and we would seriously look at kind of our revenue growth would be kind of about 20% for the every quarter. So at that kind of a revenue growth, if we can manage and maintain about 55% of occupancy at console level on a yearly basis, then that will give you a very good throughput. Giving a guidance on the ARPOB is always going to be different, because when you have a quality business and also seasonal businesses, also new hospitals, especially in the Tier 2 hospitals. Now we have 3 hospitals, one in Rajahmundry and Guwahati and also Warangal. So with those 3 hospitals coming in, and ARPOB growth is difficult to predict, but overall our ARPP's average revenue per patient will continue to grow about 5 to 6%. That's what I can give you guidance.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Rainbow Medicare. Stock is down around 1.3% today, and in fact has corrected around 20% from its 52-week high of over 1,700 odd rupees. So that stock in focus post its numbers. We'll take a short break, but we'll focus on the F&O setup at midday on the other side. Stay tuned.